heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Ed Ludlow in San Francisco. Carries off on assignment. This is Bloomberg Technology. Coming up, we're going to talk earnings as Oracle posts its biggest gain in 2 years amid a spike in bookings in its cloud computing business. Details ahead. Plus, Bitcoin continuing its record-breaking run as $2.7 billion flowed into crypto assets last week. We'll discuss with the Delta Blockchain Fund CEO. And legislation that would force TikTok's parent company to sell it or face a ban in the US is picking up speed in Congress. We'll discuss that and so much more throughout the hour. Let's get right to markets. And it was a hotter than expected CPI print that drove the narrative this morning. Actually, in the equity space, it was kind of a negative reaction at first. We haven't really changed our mind about the idea that if a rate cut is coming from the Federal Reserve, it isn't coming till June. But actually, look at the NASDAQ 100. We're now up by more than a percentage point. A lot of the legwork coming from some of the earnings story that we're going to get into. Semiconductors also higher, outperforming 1.4%. Even as you do see rates creep higher, US 10-year yield was up about 5 basis points, 4.14%. And now Bitcoin is down 1.36% at this moment in time, just below or above, 71,000 US dollars per token. I talked about the kind of upside in equities, NASDAQ 100. It's probably Oracle that accounts for a lot of that. At one point in the session, on course for its biggest jump since the end of December 2021. The story, 25% top-line growth in its cloud business. If you look at all of the analyst notes, there is an AI tailwind here as Oracle tries to compete with the hyperscalers. Let's get right to that conversation and bring in Bloomberg's Brody Ford, the Oracle whisperer-in-chief. I mean, that for me was the story, right? You know, overall top-line growth, 7%, matched estimates. But that performance in the cloud unit, that was pretty good.
Yeah, they booked a lot more business than anybody expected, and the executives attributed that to the cloud business, saying that right now, everybody needs more cloud computing power. Era of AI, training models, plus just mass digitization means that there's not enough computing power to go around, and a lot of folks are signing that piece of paper with Oracle, and we should see that turned into revenue in the coming quarters.
Brody, one of the great things about you is you can take any technology company that on paper, I'm saying on paper, can be a bit dry, right? They used all this jargon that we don't fully understand. In Oracle's case, remaining performance obligation. If anyone phoned you up and said that, you'd hang up, you'd fall asleep. But actually, in Oracle's case, this is a mighty impressive backlog of business, and the street's really paying attention.
Yeah, absolutely. It is the backlog, as you said, right? It's business that's been signed. And what's interesting about that is the reason it's a backlog is because they don't have the physical space, right? I mean, the cloud isn't this infinite thing in the sky. It's data centers in Virginia, right? And they need to build more of them. They said that in the next year, they're going to spend $10 billion building out their data center presence around the country. And think about that CapEx compared to a couple years ago, it was $2 billion. I mean, this is a huge increase. And that's what's giving investors confidence that they truly are building out their footprint in response to customer demand.
So I talked about the AI tailwind. That is what the bulls see here. But what is Oracle's AI story? Where do they fit in everything that's going on?
Yeah, I mean, every software company wants to say that any outperformance is due to AI. Oracle's no different. It's hard to exactly parse how much is coming from it. But there is some real third-party voices here saying that Oracle's cloud is particularly good for training and inferencing these AI models, which are notoriously resource-intensive, right? And so we've heard of a lot of folks going to Oracle to train their models. And yeah, so that has been fueling some of this demand. But there is some skepticism, right? Brent Thill was on here yesterday saying that the actual current amount of revenue coming from AI workloads is not massive. But the idea is that in the coming quarters, in the coming year, as AI becomes a more mainstream part of the tech stack, that will increase.
All right, Bloomberg's Brody Ford. And as we talked about earlier, Oracle a real kind of contributor to the upside we see in equities, particularly in the tech sector this morning. Good to see you, mate. Now let's turn to another top story we've been tracking for about a week. The latest in Elon Musk's lawsuit against OpenAI and Sam Altman. OpenAI saying in a court filing that the billionaire's claims, quote, rest on convoluted, often incoherent, factual premises. Let's bring in Bloomberg's AI reporter, Rachel Metz. What is it that OpenAI is trying to say here in normal people speak, Rachel?
OpenAI is actually echoing in this court filing a number of the things that they said previously in a blog post that they put up that had a lot of juicy emails. This was last week. And also some internal memos that we got a hold of recently. Basically, they're saying there was no agreement for us to do what you said. What you're saying is incorrect. And you know, a few other tidbits of just saying, as you said, your argument is incoherent. And what's funny about this is it is a procedural filing. They were putting in this filing to say that we want this court case to be classified as what's known as a complex case in California. And that'll give it a tiny bit of treatment in a different way by a judge who, you know, can understand this stuff and also like get things done quickly.
Well, there's also a reason why. So Vinod Khosla, who's one of the early OpenAI investors, was on the show yesterday. And one of the things that he was arguing for was that, you know, OpenAI is critically important from a national security context, right? If America wants to be competitive in AI, then we need to support OpenAI in doing that. And my understanding is that one of the things OpenAI did with this filing is basically to say, hey, if we go through with this lawsuit, the discovery process will give away all our secrets in the context of AI.
Yes, they did argue that. Although, to be fair, one could argue that any discovery process might have a risk of bringing up things that you don't want shared with the public, right? I mean, that's part of what makes it just interesting to the rest of us, right? What comes out in the discovery process can be very interesting. That could be, but hopefully we'll get some interesting information, and some of the things that they are hoping to keep proprietary will be kept proprietary.
All right, Bloomberg's Rachel Metz covering a story that we've been covering almost daily for a week now, and we will continue to do so. Another big story in the world of technology, NVIDIA and Databricks are facing copyright infringement lawsuits from a group of authors alleging the company's respective AI models are trained on their books without permission. The pair of proposed class actions filed in San Francisco federal court allege NVIDIA and Databricks built their models on a library of pirated digital ebooks known as Books 3. The suits were filed on March 8th, and they joined dozens of authors and copyright owners around the country suing top AI companies, and those include OpenAI and Meta. All right, coming up on Bloomberg Technology, Bitcoin hovers near that all-time high. Can the cryptocurrency run be sustained? $71,692 per token right now. We're also taking a look at shares of ARM, the chip design firm. 'Tis a story as old as time. The lockup is ending, and the concern from shareholders is that those insiders that are now free to sell shares will do so. Of course, it's a story that happens for many in the immediate post-IPO aftermath. And think about the number of tech names that have listed in the last 6 months or so. We'll continue tracking that. Softer 0.3% on ARM. This is Bloomberg Technology. Bitcoin's record-breaking run showing few signs of slowing, with large amounts of capital inflows. Strong demand for the cryptocurrency saw it reach an all-time high of $72,881 on Monday, with some investors eyeing a target of $80,000 in the medium term. Meanwhile, Grayscale Investments is looking to launch a clone of the world's largest Bitcoin fund after it saw more than $11 billion of outflows from its GBTC fund. Let's get the analysis from Kavita Gupta, Delta Blockchain fund founder and general partner. So, there's something going on in the short term, and then there's the debate about what's going on in the long term. Let's start with the short term. The flows data seems to imply sustained momentum behind at least institutional interest, right, in Bitcoin. Just give me your assessment of the here and the now.
Yeah. So if I look at the short term, Ed, I really see that the Bitcoin ETF demand has surpassed a lot of people's expectations. I mean, traditionally, we have always expected that Bitcoin, before Bitcoin halving, the prices always goes up. But even when we see the sell pressure from the market, people who have been through the bear had actually hold it, we see the buy is just too much. So it's been a very interesting cycle for Bitcoin.
Something that I've been bringing up on air in the last few days, if not weeks, is that there is a scenario where those that are bullish on cryptocurrencies, particularly Bitcoin, and those that are bearish on Bitcoin seem to agree on one thing. That is, from where we are now, it is likely Bitcoin goes to a higher milestone. We just talked about 80,000 as a medium-term call. I've also seen 100,000, but there are many that agree that it will then pull back. What's your understanding of the why behind that?
I think combination of things. The first thing is after the Bitcoin halving, we always see some sort of a plateau or 10 to 20% pull-in squeeze. We are also expecting, a lot of people in the market are expecting interest rate to be cut down before elections. And I think the elections being this year in United States going to really define how the political roadmap, whether pro-crypto or not that much pro-crypto, going to define. But beyond Bitcoin, we have already started seeing the technology rally, which is with ETH and Polygon and Solana. So I think that's also going to define this roadmap of Bitcoin prices.
There is an interesting news story this very morning where the Riksbank governor, a central banker, gave his opinion that he wanted to minimize Bitcoin's, I guess, influence, presence in the financial sector. He said, I want as little Bitcoin as possible in the Swedish financial system. What do you make of the central bank governor weighing in like that?
I mean, we have seen that again and again. Every bull cycle, we see some country or some influential Web2 world institution coming and saying this could be a problem, and then in the bear market they are like, see, we told you it's a problem, and then more institutional adoption, more retail adoption, and then more and more states and countries started using it. I mean, so it's not new. Said that, I think it's beyond any particular state, city, country at this point of time, to all the way to US, where now we do have Bitcoin ETFs, where only 3 years back, the question was Bitcoin will be even legal or will it exist or not, back in 21, 22 itself.
The central bank governor's argument was that it's not a threat to financial stability, but he's worried about the impact on consumers that may or may not choose to hold that as a risk asset. What is the big picture that's happening here beyond Bitcoin? What is the state of industry right now for crypto, Kavita?
I think it's all about technology. We usually, Ed, like you and me have talked about this before, we always talked about just the Bitcoin and the prices. Like even when we talk about anything in this space, we always talk about whatever has got hype, like, oh, NFTs done by some Hollywood actor. But the real thing out here is the technology, the decentralization of things, which are now used by some of the biggest companies, some of the biggest institutions globally. And that's why you see Ethereum rally as the second biggest asset currency. Then you're seeing altcoins, which I want to call technology tokens, actually, whether it's Polygon, whether it's Solana, whether it's Arbitrum. Optimism is doing very well, which is letting the transaction per second to be way much more scalable and much less cost. So I think it is about the technology which is not just Web3 native, but adoption in supply chains, adoption in international remittances, adoption in stablecoin yields. And I think we need to start talking in the mainstream media more about the underlying tech than just the price movement. It's really amazing when we have $1 trillion to talk about, but I think the technology should start making the highlights now.
On the technology and the long term, there seems to be bipartisan, not support, but probably acknowledgement of what's happening with cryptocurrencies and the underlying blockchain technologies. Do you agree with that? That's what's happening in DC in particular?
Yeah, but I also feel like DC is much more informed today than what it was 5 years or 4 years back. But at the same time, we should look at blockchain as a more of a trusted technology than just, oh, whether it's a cash currency or Bitcoin. So just to give you a quick example, because you were just talking about OpenAI, today you can scrap data from anywhere, but doing the verification of that data has always been a problem with the social media and the AI chat GPT process. And that's what gives you on blockchain, the verification of the data, the ownership of that content, and whom to give it back to if there's an IP right associated with it. Very similar to what New York Times and a lot of news media actually tried to blame and sue OpenGPT. I think we are forgetting that at the end of the day, whether it's Ethereum, whether it's blockchain, any of those things, Bitcoin, we are talking about the underlying traceability, verification, decentralization technology. And I think going back to DC, more and more people are getting informed about it. But just the charm of talking about 20K Bitcoin prices are just too difficult to get away from.
We didn't get to Ethereum, but I would note that there are lots of headlines about investment into the Ethereum ecosystem, which you'd point out. Kavita Gupta, the Delta Blockchain Fund. Great to have you on the show. Thank you. Now, coming up, is campaigning on TikTok a good idea? Bloomberg's Alex Barinka investigated using a case study of Katie Porter, who ran for the Senate in California. I'm going to bring you that investigation next. We're also taking a look at shares of Apple. News out of Europe. Apple will allow you to download applications from the web outside of iOS, localized on the device. It didn't do much to move the shares, 0% on the stock. And as we head to break, earlier today we sat down with Morgan Stanley strategist Michael Wilson, who had this to say on artificial intelligence.
We do believe in AI. We've been probably more front-footed on this theme as a firm over the last year and a half. The real opportunity, though, is going to be when this technology diffuses across the economy. And that would be the adopters. And that's very, very early days.
Okay, it's time for Talking Tech. And first up, Jamie Dimon has once again hailed artificial intelligence, pointing to the technology's, quote, unbelievable potential for the banking industry. The JP Morgan CEO says AI's use across functions like risk, fraud, marketing, customer relations has caused it to grow in importance within the company. And Xiaomi, a Beijing-based electronics firm best known for its smartphones, had its biggest intraday share gain in more than a year after the company announced it will start selling its long-awaited electric vehicles this month. The company's multi-billion-dollar bet marks its entry into a red-hot contest in China's EV market, which is led, of course, by Tesla and BYD. Plus, legislation that would force TikTok's Chinese parent to sell itself or face a ban in the US is picking up speed in Congress, posing a dilemma for Republican lawmakers after former President Donald Trump reversed his previous stance and suggested the app should not be banned after saying all young TikTok users would, quote, go crazy without it. Let's stick with TikTok and let's turn to its current place in the political landscape. Every election cycle, one social media platform emerges ahead of the rest as a means of connecting with young voters. And this cycle, all signs point to TikTok. But is campaigning on TikTok even worth it? Bloomberg's Alex Barinka has done the hands-on and scientific reporting of examining Katie Porter's campaign for a run for the Senate seat right here in California, which did rely heavily on TikTok. Explain your methodology, Alex.
Yeah, so I looked at Katie Porter and opponent Adam Schiff, who was the front runner, and their performance on TikTok. Porter's known as kind of a beloved TikToker. Her engagement rates are better than even the best influencers. So I wanted to see how that played out in the open race for the Senate primary, which goes to the top two vote getters regardless of party. Well, on TikTok, Katie Porter well outperformed Adam Schiff. She posted half as many videos, but had twice as many views total. Her engagement rates were stellar, and going into the primary in early March, she was polling incredibly well with young voters. The vast majority of voters under 30 preferred Porter. The problem with campaigning on social media was laid bare, though, with the results. Porter came in third, which means she will not be on the ballot in November.
Right.
Why, Ed? Well, those young people on TikTok didn't show up to the polls. Only 10% of voters were under the age of 30 in the primary. 47% were over the age of 65. And Ed, I just don't know if those folks are spending a lot of their time on TikTok.
I go from being the host of a technology show to being the one-time political reporter, and I was up on Super Tuesday here at the desk covering California. It's so right. There are the same number of voters in California over age 65 as under 35. The difference is the under 35s didn't show up, and in Katie Porter's case, TikTok didn't work. But clearly it has a place in this election, right? And I think there's about 170 million US users of TikTok. I think I'm right in saying, Alex. So just put that into perspective here in the context of this bill that's playing out in D.C.
There are, and it really kind of this primary lays bare also a pain point of the Democrats. They really need young voters to show up. They showed up in hordes for Biden. They showed up in the midterms and the last cycle and stopped that prophesized red wave. So for those 170 million Americans, 43% of them say they often get their news on TikTok. So this is certainly a place for politicians to spend their time, because those traditional TV ad dollars, they're looking away from those to reach younger voters. I think the important thing in November, particularly for a camp like Biden, who's now on TikTok with a campaign account, is not only reaching them, not only speaking the internet language like Katie Porter was so good at with memes and references to pop culture, but also getting those folks to not just agitate online, but get them into the polls. Bridging that gap is what political experts and digital strategists told me is going to be the absolute hardest thing. And for Biden in particular, as he battles some of the narrative around his age, TikTok seems to be a place where he can kind of be relatable, be authentic, be a candidate for those voters. Again, he's going to have to clear some of the bars to get them to not just vote with their fingers, with their likes and comments, but to get on their feet and head out to the polls.
Bloomberg's Alex Barinka. I really recommend you read that reporting on Katie Porter on Bloomberg. All right, coming up on the show, we're going to take the pulse of the IPO market and Reddit with Rainmaker Securities' Greg Martin. Let's check a look at the markets. These are your major indices that we're looking at. And I think the story is, after we got that hot CPI print, markets and traders were braced for the worst case scenario. But in reality, nothing's really changed. The market is still betting that a first rate cut would come in June, if at all. And you look at the NASDAQ 100 as an example, slight outperformance relative to the S&P 500. A big part of that, as we know, is Oracle and its strong earnings. This is Bloomberg Technology. Welcome back to Bloomberg Technology. Ed Ludlow here in San Francisco. Okay, Reddit's IPO is still the talk of, well, Reddit. Last night, the company posted an AMA, or in this case, an Ask Me Almost Anything. And in it, Reddit's admins invited Redditors to ask questions to the CEO, COO, and CFO through the end of March 12th. Reddit then plans to take a selection of the highest upvoted posts and respond to them on March 18th in a video, because legally it can't respond to them in the comments section. Here's the thing. As of this morning, the most upvoted post by Redditors posed this question, quote, "The general consensus vibe among Reddit users about the IPO and what it portends for the future of the site seems to be extremely negative. Why do you think that is? Question mark. It speaks to the historically combative relationship Redditors have on the site. And remember, Redditors are going to be able to claim 8% of the shares on offer in Reddit's IPO. Let's talk about the listing with Greg Martin, co-founder and managing director of Rainmaker Securities. Let's start with that, Greg. Your reaction to the idea that this social media company is trying to market 8% of the offering to Redditors who don't seem to like the company offering them.
Well, thank you for having me, Ed, and good to see you again. You know, it's smart. Clearly, there's a risk that Reddit sees with, just being a commercial enterprise at all, and now, selling themselves, as a public company and, trying to maximize for profits. It's kind of violates, the relationship that they have with their users who contribute a vast amount of content for free. And now they're potentially, the commercialization becomes a risk factor. And so how do they mitigate that risk? They make their users and their content generators part of the company. They give them an economic incentive to say, positive things about Reddit because, now they're hopefully going to be IPO share owners and they're going to be motivated to, speak well of Reddit. So I think it's smart in what they're doing, but there's still a risk that the Reddit backlash, from people who don't own shares or people who, shirk the opportunity to own shares because they want to remain on this, bohemian community, there's still that risk. But I think it's smart what Reddit is doing.
I've been reflecting in the last 24, 48 hours on the timing of all of this. I remember back in 2021 when they confidentially filed. 2021 was like the banner year for the US IPO market. And I just wonder how you frame the timing of whether they missed the boat or actually they were right to wait until this point.
Yeah, well, I mean, listen, it would have been great if they could have gone out, maybe in 2019, 2020, and had a few years of the zero interest rate environment that we had, and sort of shored things up, shored up their aftermarket performance. But I think going public at the end of 21 would have been a big mistake. Obviously, 2022 was a significant down year. I think their valuation would have been hammered. They would have lost, all of the halo effect of being a new public company. They were clearly, way behind in terms of revenues at that point. They didn't have an AI story like they're trying to really tell now to beef up their valuation. So I think it's a good thing that they didn't go public then. I think the markets are more favorable now for more of a long-term, successful story. And I think they're going to price their IPO at a much more reasonable valuation now than they would have in 2021.
I want to talk about the valuation, but I also do want to talk about AI. You said that they're now telling the story. That story is essentially what we could do is license the content to those who want the data to train large language models or foundation models. How does that sell to somebody deciding whether or not to buy into an IPO?
Well, that's the $1 million question. There's no doubt that the company today is 98% advertising revenue. So it's a media company, and it should trade more like a Pinterest or a Snapchat. But they are trying to push the narrative to sell more like an AI data company. They do have a lot of proprietary data that's this user-generated content around various interest groups, whether it's stocks or cars or all kinds of interest groups, so that they do have a lot of content that their users are generating, and it's proprietary. And so they've done deals already with Google. They've talked about 200 million of sort of this data revenue over the next 3 years, including this around a $60 million deal with Google. So they do have actual revenue associated with this AI training model. The AI coming onto their site, crawling through their data and training itself. So there is a story there, but it also, again, it runs the risk of inflaming their users who are like, hey, you're selling my data, you're having an AI train on me, and I'm not getting paid for it. So there's risk to that strategy as well, but I think they're trying to get away from just being a pure advertising revenue narrative, and I think it's a good strategy if they want to lift their valuation.
Okay, so valuation at the upper end of the range, $34 a share on a diluted basis, taking into account RSUs and whatnot, $6.4 billion. How marketable is that? People pay a lot of attention to a headline figure on valuation.
Yeah, well, the company did about $800 million of revenue last year, grew about 20%. So, kind of pedestrian growth. 98% of that revenue was advertising. If you just were to apply a 5 to 7x multiple to that, which is where their comps, Pinterest and Snapchat would, sort of trade in that range, you'd come up with a $4 to $6 billion valuation. So 6 at the very high end, and frankly, it probably should be closer to 5. We're seeing trades on our platform at the 4.8 to 5 billion range in the private market before they hit the road this week. So I think that it's a stretch, and again, I think it's a question of whether the market will buy into this emerging data AI story that they're trying to tell. They do have some contracts, they do have some revenue, and in order to push clear of a traditional social media multiple, that's what the market's going to have to believe, and that's why they speak up of Sam Altman, with his investment and him being involved with the company, and there's a lot around the AI story in order to push that multiple up, but I think it's going to be a challenge.
I did note that I don't think there's a single mention of Alexis Ohanian, one of the other co-founders in the S1. And when he's next on the show, I'm certainly going to ask him about that. Greg Martin, co-founder, managing director of Rainmaker Securities, always knows the pulse of what's going on in the ground. Now, coming up on the show, we're going to discuss the health of the crypto investing landscape and much more with Uncorrelated Partners founder Salil Deshpande. That's coming up next. This is Bloomberg Technology. All right, let's get some news. Venture capital firm Accel is backing an AI startup that's using the technology to kill finance paperwork. Nanonets, which uses artificial intelligence to help businesses square accounts and manage budgets, raised $29 million in an early round led by Accel India. Y Combinator and Elevation Capital and others took part in the Series B round, which brings the San Francisco-based startup's total funding to $40 million. Let's talk a little bit more about startups and venture with Salil Deshpande on today's VC Spotlight. He is the founder and general partner of Uncorrelated Ventures, which raised a new $315 million fund just a few weeks ago to focus on software and crypto. And we'd point out that for a solo GP, that's a pretty big chunk of change. Two focuses, software, crypto, which is the bigger focus?
Infrastructure software is the larger focus. That's 80%.
Why?
And crypto is 20%. Well, partly it's my background. It's all been in infrastructure software. And a lot of crypto is infrastructure software. Not all of it is, but portions of it are just decentralized infrastructure software.
How much, I don't know how to put this, feel good does spaces like infrastructure software, SaaS, get from what's happening in AI? As far as I can tell, the very basic pitch for AI is that it is a value add to existing software platforms.
Well, AI is a subset of infrastructure software, so it gets a lot of feel-good value from AI. Infrastructure software is just software that is not application software. So AI is very, very meme-friendly right now.
Tell me about it. You're talking about Elon Musk, principally.
The sentiment is too positive. It's a hot mess. Where I'd like to be investing is in the tools and tool chains layer. But there are just too many companies. It's too crowded. Valuations are high. The lower layer, hardware, is off limits to venture investors.
Right.
That's the realm of larger companies. The layer above that, the foundation models, those are also tough to invest in because they're more like operating systems, which are tougher to monetize than like databases, which are easier to monetize. So the third layer, tools and tool chains, is the best area for venture investors to be investing in, but it's a hot mess. The fourth layer, which is just using AI or leveraging AI, that's been so far a bit easier for me to invest in.
You keep saying that it's a hot mess, but there must be an opportunity or a way for you to navigate the hot mess because you've raised a sizable fund and the LPs must back your vision to invest in that layer.
Yeah, there are a lot of great opportunities. There are just so many companies that it's tough to weed through all of them and find the right ones. And when you find the right ones, the valuations are very high. The rounds are very hot. They close fast. So it's just tougher to prosecute. I do have half a dozen or so seed investments in that area. We'll see how well they do.
Well, that's a good point. So my next question would have been, well, at what stage and where geographically are you finding most success initially?
Seed, Series A, small checks in Series B, and geographically U.S. or world markets, with an exception for India.
The other focus of the fund is crypto, and I'm guessing crypto-adjacent startups that are working more likely on the underlying technology. Is that right?
Well,
as opposed to digital tokens themselves.
Well, yes, although sometimes the only way to invest in the projects is to buy the token. Sometimes you buy equity, and eventually the equity converts to tokens. But yeah, to the extent that it is decentralized infrastructure, it's in scope for me. Not all of crypto is infrastructure, though.
$315 million is a sizable fund. And I'm really interested in this economic environment, in this rates environment, what the LPs look like, you know, where you were able to raise those funds from and how quickly you were able to do it.
They were mostly institutional, so 75% is institutional, and there's a long tail of family offices and individuals for the rest. There are 4 sovereign wealth funds. There's 1 university endowment. The fundraising was not too bad. It was pretty smooth.
Let's really quickly go back to AI. You expressed your concerns about AI valuations right now, or at least the impact of the interest in AI on valuations. Do you feel like that is something that will continue throughout the year, or investors have kind of had their fill of the high multiple AI names that they've gone into?
AI is a huge long-term opportunity. It's going to change everything. Everyone's going to leverage AI, and AI is available to everybody through an API call. But short term, I'm a little worried. The positive sentiment makes me a little nervous, and I'm hoping for the trough of disillusionment to invest more. But I think beyond the trough of disillusionment, it'll be it'll be an uptrend again.
An AI landscape that is a hot mess and underpinned by a trough of disillusionment. Salil Deshpande, founder and general partner of Uncorrelated Ventures, really appreciate that conversation. Let's get a quick update. Earlier in the show, we reported on OpenAI's court filing calling Musk's suit against them incoherent. During the show, Musk emailed me his response to say, quote, OpenAI is a lie. And that's all that his response to the story said. Okay, coming up, Rent the Runway is pledging $1 million to celebrate career wins for women in honor of Women's History Month. We'll have all the details next with the CEO of Rent the Runway, Jennifer Hyman. Also, check out shares of Rumble. This is the conservative video network that's backed by Peter Thiel. You will see that they're up almost 14%. Why? Rumble's CEO has floated an interest, according to Bloomberg's reporting, in TikTok's US operations. We're starting to build out a list of who, on paper, might go after TikTok's US operations if indeed the parent company is forced to sell. This is Bloomberg Technology. Rent the Runway, a platform where customers can subscribe, rent items a la carte, and shop resale from hundreds of designer brands, is gifting $1 million in free subscriptions throughout this Women's History Month to women who have recently reached a new milestone in their career, such as a promotion, new job, successful launch, or new campaign. Here with the details, CEO Jennifer Hyman. And this is also a collaboration with LinkedIn on the platform side. Just explain why you're doing it.
Well, I recently had an experience where I had my 3rd child, and it was fascinating because I received more personal congratulations and love than when I IPO'd Rent the Runway back in kind of 2021. And I started thinking about the fact that within the context of our culture, it is kind of part of the game that women feel more comfortable sharing their personal milestones and personal accomplishments than their professional ones. And given that we live in a world that the more senior you get in an organization, the more your ability to rise is based on your brand, the stories that you yourself tell about yourself and the stories that others tell about you. This is a campaign to encourage more women to feel comfortable sharing their professional accomplishments on a platform like LinkedIn where it matters.
Jen, as you know, and as I've disclosed on this program before, we are a Rent the Runway household. My wife is a long-time subscriber, user, customer of Rent the Runway. But I think back to a year ago when you were on the show, particularly in the summer of 2023, you cut back on incentives and discounts like this. And the logic you outlined at the time was that those new users or subscribers that sign up in the face of lower discount are likely to stay longer. So what's the strategy here with this incentive in the context of subscriber growth?
Our brand has always been known as really a power tool for working women. So one of the main reasons why someone signs up for Rent the Runway is to feel empowered and confident every single day at work. So the fact now that women are going to be referring their colleagues, their peers, their friends for an accolade that they recently deserve in their career and to receive a Rent the Runway subscription, we feel that this is exactly how we want to bring our brand kind of back into the universe and create momentum around our brand being a brand that supports professional women.
When I posted on social media you were coming on the show, a lot of people brought up Newly, and they point out that this is a younger platform, but it has more subscribers than Rent the Runway has. And they ask if you've learned any lessons from Newly and taken anything from their experience that you think you might now apply to Rent the Runway.
I think that it's incredible that a market that we created around renting clothes is now a real market in the US, that millions of women per year are renting fashion, subscribing to fashion, and there are different platforms and different choices that provide different kinds of designer brands and different aesthetics. Rent the Runway is about catering to a woman who is accelerating in her career, who also, wants to socialize, who is also traveling, who's trying to optimize her own time. So I think that really focusing in on who our core customer is, this campaign being a exemplifier of who that customer is a critical part of us continuing to grow and accelerate. I think Newly has done a really great job at targeting, a significantly younger customer than Rent the Runway.
Jen, what's the AI story with Rent the Runway?
So AI is really an important part of how women search for product on our site. We launched AI-enabled kind of search and styling earlier in the year that enable women to have a long tail use case, like what should I wear to the Taylor Swift concert, and to get back a whole host of suggestions that are kind of tailor-made for her. So you'll see us continuing to iterate on styling in general and search, because part of our platform is about offering discovery and enabling women to wear things that they wouldn't otherwise buy. So AI is really a perfect complement to that.
Jen, the final question from our audience. It's been tough for Rent the Runway. The shares have had a hard run. Would you consider taking the company private to go away and kind of go back to growth?
So our focus is on driving the business to free cash flow profitability and on making the right long-term decisions for this business. I think that what has really been proven out over the last few years is that rental is a real market. It is growing far quicker than the overall fashion industry. There's millions of women who now are comfortable and confident with signing up for a subscription to fashion. That was not the case even 5 years ago. And so it's our responsibility to ensure that this is a profitable, sustainable business and that we take advantage of the market that we're a part in creating.
Rent the Runway CEO and founder Jennifer Hyman, great to have you on the program. Thank you. That does it for this edition of Bloomberg Technology. What a show it's been. Check out the pod wherever you get your podcasts. From San Francisco, this is Bloomberg Technology.